Hello guys, and welcome to this weekend's analysis. Today we're going to be doing more of a breakdown of last week than forecasting. If you do want to forecast for the week upcoming, then I would suggest you go and join the Telegram. My Telegram that is in the link is in the description below. But other than that, let's get straight into this video. Okay, to start this weekend analysis, we're actually going to start on the US 10-year government bonds, and the reason to start on this is because it is actually a pretty big driver for the Forex markets currently. Now, I would have thought after a few weeks of this drive of the market that it would actually come to a sort of halt and not drive the market so much, but it looks like the driving force of this is continuing throughout. So we may still see some impact from the current yield situation with the Forex market. So as you can see, currently on the daily, but if we quickly look at the weekly, on the weekly we actually had a very large bearish candle that had a large wick to the bottom side too. And on the daily, it looks like we've seemed to found some support. Now, we did come to the average or the daily low, and we did reject, clearly seen here, and on the 4 hour it looks something similar to this. So this is a huge supply area for government yields to push up off. It's just now to see if we could break this higher high here, and if we do break this higher high, and let's say by Wednesday next week we are above. Wednesday's an average guess, it could happen on any day, but if we do see a break above, then we will see a continuing strength in the US bonds, the US 10-year bonds, and so with that there will be a impact on the Forex market. The impact of a strong bond is risk off sentiment. If you don't know what that is, it's basically risk currencies not seeing as much of a demand. So currencies like Australian dollar, New Zealand dollar, there won't be as much demand for it, therefore they will most likely be weak, and that is also seen across the last couple of days on the risk currencies and against JPY. Obviously JPY, most JPY pairs we had a pullback. In fact, I think all JPY pairs we had a pullback, and we'll cover that shortly. And that I have been predicting, I've been saying that or forecasting that for a very long time because they were overextended. And this government yield was also in the same situation. If you can see on the weekly, we are very overextended, and this bearish weekly candle can be the start of a pullback. And that is something we may be able to see, but right now it's whether we can break this higher high. If we don't break it, if we double top or come short off a double top, then I do see lower pushes happening. So it's either going to happen something similar to this, or it's going to have something similar going downwards if we reject this area. If we do reject this area, I won't be taking any buys or sells. Not that I trade this, but this has a relation on to the Forex pairs that I personally trade. If we do have a look at the DXY, the US dollar index, we do see that the US dollar had a very strong week last week, which is quite interesting compared to how the yield situation or the yield chart finished out. On the daily, it does look like that we broke this higher high up here, which is a good sign for the US dollar, and so right now we're sort of targeting areas along these highs here. Now when we do approach these areas, we may see some sell-off, and then we'll see a pullback before continuing up. So be wary if you do trade dollar index. I just use it as an indication for the strength of US dollar, as well as risk currency and risk or the sentiment on the pairs that I do trade, but it does look like we're having a strong US dollar, and so I wouldn't be surprised if we kept continuing up. There is no indication that we're going to be pushing lower. Again on the daily, the last lower high was this double bottom here. Again, we would need to form a higher low, and once we do form that higher low, you could potentially take buys if you do trade the dollar index. Again, if you don't know where a higher low will form, you can use confluences such as pre-existing support resistance levels or key levels, as well as this Fibonacci, for instance. So the 618 level here lines up with the consolidation area we had a couple weeks ago, which could be a potentially good area. Just say the same as this high here could potentially be an area where DXY may reverse off. So looking into the next week or the upcoming weeks, I do have a strong bias on USD, but again, that could all change by Tuesday. So if you do want to stay updated, join the Telegram, link is in the description. Now if you look at GBPJPY, we actually see that last week we finished on a bullish sort of pin bar with a very lower wick, but somehow managed to finish bullish, which is a good indication for GBP. Again, after this week, after last week's candle, we had a bearish candle, which is the first bearish candle in 56 days or 8 weeks, which is important because once you see this bearish candle, a lot of sellers will come into the market trying to push price lower, and as you can see they did. If we do jump on the daily, we did have a numerous amount of bearish candles pushing price down, but we didn't break the daily low, which is right here. And as you can see, if I drag this across, we didn't break the daily low. In fact, this is now a new daily higher low. So considering we didn't break this is now confirmed to be the daily low here, the new daily low, which is important because we have now structure to push up, and so any buys along here would have made sense. Again, you can use the Fibonacci here, and this will link up with the 786 that I have right here, right on the wick. If I jump on the 4 hour and delete this box, you can see right on the wick there was a doji candle, and price pushed up. So this would have been a lovely area to take a buy. Again, a double bottom at this level here. If I just drag this box, can I get it? There we go. A nice double bottom in this area. On the 1 hour, you can actually see that we formed a higher low, and then once we broke this area here, it was a very good opportunity to take any buys because this is the last lower high going in a bearish direction. So any buys along here, which I know some people did take, was a good or a safe entry or safe bet to take an entry. But again, if you're basing it off the 4 hour, which you can do quite easily, you could have taken a buy around this area with manipulation on price, pushing back down into a double bottom area on the 786 confluence, as well as there's other confluences within that if you look at key levels and trend lines, etc, etc. Now I did actually break this pair down on for students, and there was a specific trade just here that you could have taken. It was very nice. Rode it down to the lows in sort of a bearish format because I was trying to not predict, but I was forecasting that Japanese yen is very oversold currently, and so there is needed a pullback. And so quite here there was an easy push break of this significant 4 hour low or higher low, a break of retest, very simple, and again you can break it down. It's very simple. I did break it down for students, so I'm not going to be breaking it down on here. However, I do have an EURJPY trade breakdown coming out later this week coming. My forecast for GBPJPY is most probably bullish. We're going to be breaking, if we do see a break of this higher high here, then we will see a continuation. Personally, I won't be taking any buys until we see some sort of structure forming. By that I mean a break and then come down. If it does come down into the box and reject, that's perfect. but it probably won't in perfect in the likelihood of things, because nothing is perfect, and that is pretty textbook. But what we are waiting for is a break of this higher high through GBPJPY. The fundamentals do align. There is no change in sentiment, and so really we shouldn't be seeing any sort of rejections around this area. As far as I know, again, it can change by Tuesday, so keep updated. And if you do want to keep updated, join the Telegram, link is in the description. I know I say it a lot, but it is important to understand that all this analysis, all this forecasting on the weekend can potentially all be wet away by Tuesday, by Monday morning, by market open on the weekend. Now we move on to GBPAUD. I've been saying for a long time that this pair has been ranging in quite a heavily quite large area, and it's still doing that same thing. We are seeing bullish sort of structure here with higher lows and higher highs forming, but again, I wouldn't personally trade this pair unless you're really skilled in trading a GBPAUD. Now I know some of you or some people can be, and so if you are perfect, you can keep on trading it. I'm not going to say don't trade it if you can perfectly trade this, but again, it is very difficult to trade. Now currently on the 4 hour we are forming higher lows and higher highs again, so once we did break this structure here, any buys would have made sense. Again, nice break and retest here, so there is a possible entry around this sort of area. You could have possibly done that, and we did break the 4 hour or daily highs. This could be a daily high, yeah. So we did break this sort of daily high here. We haven't really closed above because of Friday's candle bringing us back below, so I wouldn't really classify that as a break. What I would expect for GBPAUD is another pullback, grab some liquidity if this is down to the trend line, or to this daily resistance area here. It can be in a numerous of places. Again, you can use a Fibonacci to sort of gain more confidence. So yeah, around this 618.5, there is many levels within this Fibonacci that could potentially we could bounce off, but if I do see rejections around one of these fib levels and this trend line, I would be in more thought of taking a buy and ride it to the upside. Not that I'm going to be trading this, because currently we have two fundamentally strong currencies. GBP is doing very well in the recovery for COVID, as well as Australia. Everyone knows COVID is basically non-existent in Australia, and even some states are opening with no face masks at full capacity. So Australia are very far ahead compared to the rest of the world, and GBP or the UK is doing quite well for themselves, especially compared to Europe and other countries in the world also. So I do see a bullish bias on GBPAUD currently, because we are in bullish structure, especially if you look on the daily. It is very messy, but we are making higher highs and higher lows. But personally, I won't be trading it because it is way too messy. Now moving on to GBPNZD, we did see a very weak New Zealand dollar last week. If we do look at the weekly, we do see a very strong bullish candle, and so I really think that we could see a pullback on GBPNZD. Now I'm not saying there will be, but after this big push up, I wouldn't be surprised if we start pulling back and finding a support on the daily level. Now the last sort of higher low was around this area, so a pullback to around this 618 would make sense. If I just drag this back over here, around this 618 would make sense because it would link up with this high. Do I expect that? Well, I am sort of expecting that, but it is pretty textbook, so I wouldn't be surprised if it didn't happen. Again, this is just a clean chart, so I don't have any markings to go along with this. But really, I'm waiting for a pullback really. This here is the last 4-hour sort of low area. Now it isn't the strongest of levels, in my personal opinion. It doesn't look too strong, but if it did break this level, there is a potential, there's space for a sell around this area if we are riding down into the 618s. Again, it will be very, very hard to trade. That is a pullback trade, but it is possible. If you do want to look at that as a potential way of getting into the market, there is that method, especially if it is clean and it makes sense. But overall, I do think we will see a pullback on GBPNZD. We're currently sort of at this structure point here, which is quite high. It is last year's October sort of levels, which is quite important because ever since then we've been in a bearish trend. So any breaks of this, we will see more buyers, but around this area I think we are going to see some sellers because it is a large supply area, and if we do see that demand like we have with the recent daily candle, we may see a further continuation for the downside, especially if we break this low right here. If we do break this low, then we will get more sellers in the downwards direction. Now if we move on to EURJPY, sort of similar setup to GBPJPY. However, we did finish with a bearish candle compared to the other pair. Now that is because the euro is a lot weaker than the pound, typically because of what's happening in Europe with the COVID vaccinations being pretty slow, as well as talk of a third lockdown because of how bad the COVID situation is getting again. If we do look on the daily, we do seem to find some support, but we have broken this sort of daily support that we did have, and which in general, it could say we broke it, could say we didn't. In fact, this sort of lower high or high low here is really a high low. So if we do take that into consideration, we have broke this low here, so it does look like a bearish structure. With the strength of JPY creeping in very, very slowly, I do actually see some strength coming into it, coming into the JPY, especially with how the economy is starting to open up, as well as there is some risk off sentiment or riskier news coming out as of lately, with the Chinese talks with Biden not going too well, and Biden saying he's not changing his plan from Donald Trump's relating to China, as well as North Korea talking about warning the US, as well as China potentially invading Taiwan. Now all of those are very, very, very bad news for risk currencies, and in general will affect traders, because they won't be willing to put their money at risk into riskier currencies such as the Australian dollar and New Zealand dollar. So and obviously if we're not investing into those, the money will be going into safe havens such as Japanese yen, and so typically we may see some strength in Japanese yen in the upcoming week. Now looking on the 4 hour, we are actually sort of coming to this area here, and we're sort of breaking it, sort of rejecting it, not really knowing where price wants to go currently. On the 1 hour looks pretty messy. The last sort of, looking on back to the 4 hour, the last lower high is actually up here. So as long as we don't break this area here, we're actually in a bearish sentiment. This is the last daily higher low, which is through the consolidation period. But you know, we are starting to see some bearish sort of structure forming, and so if I was to be trading EURJPY, I would be looking to take sells. In fact, last week I did take a sell. If we actually get that up, as you can see, this is my trade from last week. I'm not going to break it down currently because I'm going to be breaking that down in a separate video coming in the week about to come. But as you can see, it was a 1 to, well, it was a 1 to 8 risk reward or something similar to those lines. But I actually did get out at 1 to 6.75, so I did get out at that level here, and that is just because of the 1 hour sort of struggling here before pulling back, and I just wanted to get out. Last week was a pretty busy week. We have exams and other stuff, so that's the reason why I didn't trade that much last week. But in terms of EURJPY, we are in a bearish structure, so sells are more likely to be in my personal mind. Currently there is a 618 level here that we could be rejecting. The daily was a very, very strong daily candle after a doji sort of candle format. So overall, I'm looking to potentially short EURJPY. There is this 786 area, which is important because on the daily that is a support that was sort of broken. Again, looking at here, it does look potentially a price for supply, so there is that area there which we could be shorting off, and if we do, that would make sense. But going into the week, I would looking to be shorting EURJPY, although fundamentals are a very, very risky sort of place currently. So I think waiting to see what the market does for Monday and potentially Tuesday is the safest bet, like I'm always advising. So we'll be waiting for Monday and Tuesday to finish, and then I'll come back to this pair and sort of see the evaluation and see where price is moving and directing, and then we can take some sort of bias and potential trade. Now if we move on to the Euro-Australian dollar chart, we're currently on the weekly, and we can see that price is not being able to break this 154 area. Now if we look to the left, it has been a support in the previous history, or the recent history that we have, in 2 years ago June, as well as 2 years ago November. And so we could potentially see sort of a reversal here, but if we do go down to the daily, we can see that I've already marked this pennant structure here. Now this is important because we aren't breaking the lows around 1527, but we aren't breaking the recent significant high either at 1566 area. And so that basically means we're ranging, or we're ranging in between these 2 points here. So personally, taking any trade wouldn't really make sense unless there is a sell opportunity at the top. Again, because I've been pretty much bearish on the EURAUD for a very long time, and I have been targeting this 1505 area. So personally, I would be looking for sales still, but it doesn't make sense at current time because we aren't making any lower lows, nor are we making higher highs. So there is no sort of structure currently par this pennant that we're ranging in between. If you do possibly want to take a trade on your oil, I would personally wait for a break, because I don't like taking sells at the top of a pennant. So I would wait for a break and a retest and then look for a sell-off. But that is my personal opinion for EURAUD. There isn't much I can say par wait for the market to show you what to do. But let's get on to Euro New Zealand dollar. So Euro New Zealand dollar is in a bit of a different situation compared to Euro Australian dollar. Now that's because New Zealand dollar was a lot weaker than the Australian dollar. Now I actually forgot to mention this in the GBPNZD sort of breakdown. The reason for New Zealand dollar's weakness isn't just because of the risk off sentiment with what I've listed before, but it's also because there is a housing sort of problem in New Zealand. Now, there isn't an easy way to explain it. If you do want to understand it, then personally I would go recommend you doing some research about it. However, last week the Royal Bank of New Zealand actually said that they were going to be targeting it in a specific way, not relating to interest rates, if I'm not mistaken. Now I could have got that title wrong, I may have misread it or just forgotten pieces of information, but I think that is what they said, and that was sort of a wary sort of moment for the New Zealand dollar, and actually seen a lot of buys off that news, as well as obviously the risk sentiment not helping with, again, China and North Korea problems. And so we did see a very, very bullish structure. In fact, we broke the higher lows that on the Euro Australian dollar chart still apply for bearish structure. It doesn't actually apply for bearish structure on the Euro New Zealand dollar. So the last significant high was either this area here, or more confidently this area here. Now both of them were definitely broke. Currently we are seeing a retest of this area on the daily, as well as all the other time frames, but on the daily we did see a tweezer formation slash, it is sort of like an engulfing candle because it doesn't exactly have the same body. But on the 4 hour, again, we see tweezers and bearish engulfings, as well as large wicks to the upper side, before continuing downwards. So currently I'm not too sure where Euro New Zealand dollar can head. There's a market structure in place that we will see bullish, or we see a bullish sentiment and buyers come into the market. However, the fundamentals don't really align, as the euro is still weak, if not getting weaker. And the only sort of situation with the New Zealand dollar is, that's in bad news for the New Zealand dollar, is the housing problem as well as the risk sentiment. But other than that, COVID non-existent in New Zealand, and their economy recovering period is going quite well. So it is quite hard to say for this pair. Personally, I would wait for the market to show you something. If it does show signs of reversal at a area with key levels, support and resistance, trend lines, Fibonacci's, etc., then you could potentially take a buy, and it is in the same sort of scenario for sells as well. So if it does have a sell formation or sell pattern come up, again with the same confluences that I just listed, then also a sell is valid. The fundamentals technicals are very, very opposed here, so personally I wouldn't be trading this pair unless the fundamentals were more clear and the technicals aligned with that. So currently not trading Euro New Zealand dollar, however could be updated throughout the week, and there is a potential setup that could possibly happen, because nothing is impossible. Now moving on to the Australian dollar Japanese yen pair, like all yen pairs, we did see a pullback of some sorts. Again, predicted it or forecasted it for a very, very long time. As you can see, we were pretty oversold, and we have now seen a retest on Australian dollar JPY, which is good. If you go back to the weekly candle, it's the same sort of scenario as EURJPY, with this pin bar sort of long wick on the bottom side. The daily, we are looking, we're in the same formation as GBPJPY. This is sort of the daily higher low. Again, we did not break it, in fact we didn't even touch it, which is good. Fibonacci, I don't think the 786 will line up with this, nope. But we did close below 786, and then the next daily candle we literally just came right back above, so it isn't a break. You could potentially say that is a hold of the 786 level. but we did see some orders below that area. So I wouldn't say it's the most the cleanest of things out there. Again, on the 4 hour, same situation as GBPJPY with this double bottom here. Very nice opportunity to take a buy. Again, for a 1 hour is the same situation. However, we didn't have a retest of one of these breaks up or these resistance up here, so potentially you would have got the entry like that for this pair. I'm more inclined to take a sell once this formation here happens. However, more risky, but there was an opportunity nevertheless. Looking back to the 4 hour, the Australian dollar Japanese yen chart wasn't the easiest to take a sell in the same place I took on EURJPY and explained on GBPJPY. Now that's because this area here was much harder, or in fact a lot more difficult to spot that this is a support slash key level area. Now if you do drag this box all the way out, it is, as you can see, a repetitive area where price reversed. So you could have taken it, but it wasn't as clean as the other pairs that I have shown you. So overall, same bias, Australian dollar Japanese yen as GBPJPY, but preferably I would use the GBPJPY because it looks to be moving a lot cleaner than this pair currently. Now lastly, we're looking at the gold chart here, and you can see that we did finish off with a bearish candle. There wasn't much in the gold market. Again, consolidation throughout, so I'm not going to spend too much time on this. But if we do go back to the weekly, we sort of tapped into this area here, which could be seen as sort of a pullback. This is definitely now a pullback, and we could see some bearish continuation, which is a possibility. But currently we're just ranging in between this consolidation period. Very boring for gold. Usually this pair moves very much, but when it does get going, it's gonna move quite a lot. So if you are trading this pair, then personally I'd just recommend to wait for a break and retest. It gets very boring, but there is that sort of discipline that you need to have before when you're trading, so you don't overtrade and lose money. Very basic core principles, but remember to stay disciplined. There isn't any sort of possibilities or opportunities for gold that I can personally see on the higher time frames for the past week, but overall I think there is some area we can push down to. But if we do push up and we do break this high here, then I would see a further continuation in the bullish center or bullish direction, and it is possible that we can go in that direction with the risk in the world right now, with the trade sort of war, the conflict between US and China, as well as North Korea, as I've mentioned before. But other than that, this is it for this weekend's breakdown. I hope you did learn something. If you did, please press that like button, and other than that, I will see you in the next weekend breakdown. Again, Tuesday's analysis will be just limited to the Telegram, so if you do want that, be sure to go press the link in the description and join.